So in this video, I'm going to introduce you the 5 best stocks to buy in July 2021. These stocks are showing high growth, they're showing excellent charts, they're showing excellent fundamentals as well. Plus the news stories, well, the news stories are the news stories, right? So, but they have some pretty good news. So other than that, welcome back, fellow speculators, to Stocks Now. And my name is Berg, I'm your host. So let's go over the charts first, and then we'll jump over to the fundamental themes, and we'll go over some of the news stories and see what's happening with these stocks, okay? So let's go ahead and get a move on because time is money, all right? Okay, so the first stock that we're going to go over, or the first chart as well, is VTGN, which is VistaGen Therapeutics Inc. Okay, they are in the healthcare sector and biotechnology industry. If you know anything, that's what's been developing in the markets here lately for the past couple of weeks. Healthcare has been one of the strongest sectors, if not the strongest sector, for several weeks now, and biotechnology companies have been great. They've been excellent, showing a lot of strength in this sector and industry. Okay, so the thing about this chart here is that we have this nice uptrend, this prior uptrend of greater than 25% from low to high. Okay. We're starting to base out right here. We are in a stage 2 accumulation phase, okay, within the cycle of the stock, meaning that we do have institutional buying, okay. This is a good thing to see. As you can tell, look at how many shares are trading right here, how much demand was. You know, demand right here, demand right here, demand right here, right off of this 50-day moving average, okay. So this is a really good intermediate term play right here. So really a good short-term play. And you know, you also see demand happening here, and today we're having really strong demand as well. Okay, so that's good. Those are good signs. Not only that, the price action is showing you and meeting that demand as well. Okay, so this is real. I mean, this is happening right here. We do have institutions buying in on this stock right now in a really strong uptrend. We're moving up. This is a nice just rounding bottom pattern within a primary base. Okay, you want to be looking for these primary bases, the primary, the secondary, and the third, or the tertiary bases. Okay, these give you more of a probability of latching on to a super performer, or a stock that's actually about to make the next major move in its price cycle. Okay, those give you, that gives you the odds, that probability, that high probability, okay, with buying within the stock. You just got to time it right, and we're going to time it right here, okay, because this stock looks like it's ready to go, because this is the primary base, and once it moves up, maybe it'll move up over 100%, maybe. It'd be nice. But anyway, so where you should be buying at is right here. Okay, this is at that $2.95 mark. Okay, we want to see this hold this right here, really about $3. That's where you want to see it hold. Okay, so we'll place that right there. That'll be our super pivot. This did pop up on my alerts because on the weekend I go through several hundred charts, and I look at them from a weekly basis, and I pick my points from there, and I set alerts so that for the next few weeks or whatever, they can alert me if they start breaking past, if they start moving past that that pivot point, what I call the super pivot, because once that point's reached, and these stocks can get a move on. I've traded them like BILI, Billy. That one I caught perfectly. That was, I think, like in April or something of that nature last year. Also, what else? CELH. Boom. I mean, I was on top of that. So, I mean, if you do it right, you time it correctly, you can really get some juice out of these stocks. Okay, but this stock looks really good for this month. If you're going to place with risk management, let's say if you're going to place your stop, let's go look at how we're going to deal with that here. So let's go look at the position sizing calculator real quick, and I'll give you a heads up as to how to manage this. Okay, so let's say we start off with a $1,000 account. Okay, say we're willing to risk 1% of the total account, which will be about $10 of the total account equity. So you're willing to lose $10 of that $1,000. Okay, not bad. So let's say we place our buy point at $3.07. Well, where is it that you want your stop? Okay, do you want it at the low of today? Do you want it? Do you want it at the low of today? Do you want it right here at $2.54? I'm going to tell you right now, if the stock does break down past that $2.54, so if you have this right here, this move down here breaks past that, I'm going to tell you right now, this trade is going to be dead in the water, and we can probably expect it to go down this 150-day moving average and probably the 200-day moving average. Okay, right back down here to this support is where you can expect it if it breaks down past this point right here. Now this pattern within itself, this is an excellent pattern. This is why I like this stock. This is why I chose it. I didn't really care all that much for the fundamentals, the news, whatever, but I like it because of the chart pattern. This is what's called Mark Minervini's VCP pattern, or characteristics of the pattern. Okay, VCP means volatility contraction pattern. This is a nice tight range, nice tight price action. It coils right here and is breaking out of that top right there. Of course, you can see at $3.15, it's breaking out of that high right here, this nice coiled pattern. So low volatility means contraction in price, means tight price range, okay? That's good to see, because that's what you want to see when the stock starts moving out of it, because that brings a springboard. It's like a springboard. It's like getting on a jumping, on a springboard and just jumping right off into the water. I mean, that's what it does. It just springs up, boom, and flies. And I've seen it over and over and over out of my 14 years of observing the markets. Been doing it, been trading for 11 years. So I know, what I'm looking at here, and this has all the elements of what I like to see when trading a super performer. So other than that, like I said, if you want to place your stop here at $2.54, that's going to give you a wide stop right there. But it'll also, let's go look here, and I'm going to show you my method, my AWR method, just to give this stock some room. But let's say you go ahead and place your stop at that 254 level. Let's say 3 cents below that at $2.51. Do you see the stop loss percent right here at 18%? I don't like that. Not only that, your position size on a $1,000 account is only going to be $54. So I mean, it's only 5% of your account. I don't like that right there. So what I would rather do is I'd rather take my method here, and I would rather say, let's say you start off with a $1,000 account. What are you willing to lose of the total account? Let's say if you're willing to lose 1%, so you're still willing to lose $10 on the total position. Let's say percent willing to risk of total account equity. Let's say you're willing to risk the full 100%. So you're willing to risk that $1,000, okay? So let's say that your initial buy point, let's say your initial buy point is 307. Let's say your stop is at that $2.51. Okay, so your initial risk is still 18.24%, but what you're going to use according to your first initial buy point is going to be $54. So that just gets your skin, some skin in the game here, some skin in the stock itself, okay? So what you got to think about is positioning yourself within the stock, okay? You don't need to put your full amount towards the trade right off the bat, because you never know what the stocks can turn in one day, okay? It's like a dog with rabies, you never know, and that dog might be nice, all of a sudden, then next thing you know, boom, turns right on you, bites you. Okay, same thing with stocks. It'll do that. It'll bite you right in your ass, and you won't even know it. Okay, you won't. It's hard to see that those things coming, because well, we can't tell the future. We don't predict the future, and that's the way it is with stocks. Okay, because if we could, then we would all be wealthy, and that's just not how that works. So life is funny, very strange, but hey, it is what it is. So we go on. So what you're going to do, initial amount to be used towards this buy point for the first buy point is going to be $54. Okay, so the percent used of the total equity on initial buy point is only 5% or 5.5%. That's really good for risk management. Okay, you're playing it really safe with this. Okay, especially being a penny stock. Penny stocks are dangerous. You got to know how to trade them. You got to know the patterns that work with them, will work really well. And I'm going to tell you right now, one secret to trading these stocks, you look for those rounding bottoms, those ones that are working right off of that 50-day or the 200-day moving average and just moving up on the right side of the base. That's the secret of trading penny stocks. So whoever tells you different, okay, whatever, maybe they say a different pattern, but I'm going to tell you, after years and years and years and years of going through charts, probably hundreds of thousands of charts, if not millions, that's no joke. Yeah, you pick up on these things, okay? So eventually you do. Sometimes it takes a little while, but other than that, so 5.5% of that $1,000 equals $54.82. Now the amount that you're going to be using towards the second buy point, okay? So you're gonna pyramid in. You're gonna position size yourself accordingly, and you're gonna pyramid in right here, okay? So the second buy, you're gonna buy $945 worth, which that'll give you your whole $1,000 account equity towards the trade. And your second buy point is going to be about 2.5%, either 1 to 2.5% above your initial buy point, okay? And so this one's at $3.15. If you want, you can go about 3 more cents or 4 more cents to $3.19, okay? And that'll give you, you know, above that 52-week high on the chart. And so you'll wind up buying anywhere to 300 to 305 shares, okay? So if you look back here, right here, look over here, your total number of shares is going to be 317. Your total cost is $1,000. Your average buy price is $3.11. Okay, so you're still willing to risk only $10, so you're only willing to lose $10 on the trade still. And of course, you're still, your percent willing to risk is 1%. So your target loss is going to be at $990. Your target stop in dollar terms is going to be at $3.08. So if the stock pulls back to that $3.08 level, that's where you're going to take your loss. That's where you're going to stop and get stopped out. You're going to take your loss and move on to the next trade. But if this one starts acting well, it'll take off like a bandit, and it'll do its thing. And that's the way stocks work. So your percent target stop loss, 1%. Your profit target, you want it at least 3 times. So you're looking for about 3% profit target. Make it a little bit more than that. And so, you know, make it 4, 5, 6, 7 times that, okay? Because this one could really high fly, and let it do its thing. Profit target would be at $3.20, okay? But like I said, it's okay if you want to take a bigger risk. If you want to say 5% and you're willing to lose $50, well, this is how this would work. So your initial amount to be used towards your first buy, $274, and your second buy point, which will be $725, you're still at, you're going to take a 5% loss. So this will give you a target stop loss of around $2.95. So it gives you a little bit more breathing room from that second buy point, because all this does is takes the average of the initial buy point and your second buy point and then divides that by 2, and that's where you get your target stop loss at $2.95. And that's how that works. So the average of the buy price, and that's happened, and that's how that works. Okay, so let's go ahead and move on to the next stocks here, because well, time is of the essence here. I don't want you to miss any more profit than what we've already lost here on this stock. So other than that, VTGN looks like an excellent buy to me for July 2021. And let's go ahead and get a move on to the next one. We're going to go over VNDA. This one is part of the healthcare. This is Vonda Pharmaceuticals Inc. They are in the healthcare sector and pharmaceutical industry, okay? This one, what I like about this is displaying a nice flag right here, and we're breaking the high of that flag, okay? So not only that, we're at 52-week highs, and this is a nice secondary base. This is a nice rounding, or you can say cup with handle pattern right here, which we broke over that the high of that handle, and now we're moving more of a flag pattern. This is a good point to add to your position if you've already bought this stock. If not, this is a good time to go ahead and start buying this stock now, okay? So other than that, we have excellent volume. We do have volume dry up within here, within the base, within this rounding, and as it's moving to the right side of the base, or moving up the right side of this base here, we still have volume dry up every time it pulls back, okay? That's what you want to see. Every time the stock dips back, we got volume moving down. That's what we want to see, except for this day, whatever, so what. But other than that, and you want to see demand rising as the stock's moving up on the right side of the base. As you can tell, we do have nice demand here, really good demand for this stock. We are in a secondary base here within a stage 2 cycle, okay? So we do have a lot of accumulation, seems to be. Institutions are buying. They're buying right off this 50-day moving average. Each time it drops down to that 20 and 50-day moving average, boom, you have the pop up and move up, okay? That's good to see. That's what we want to see. We want to be buying with the institutions, okay? So when you're going to place this trade, how you're going to place it right here, matter of fact, let me point this out, we are at 52-week highs here on this stock, and we do have nice contractional periods within this stock, okay? So nice tight price ranges within this stock. So low volatility, springboard action, okay? That's what we want to see. So let's go ahead and look to see, well, how would we handle our risk on this one, okay? So if you're going to go ahead and buy, place your stop right here at the low of today, okay? The low, which is going to be at $20.16. So let's go look at our position sizing calculator and let's go see what we would use right here. What we, how much, you know, the risk that we're going to take and how much we can position size according to a $1,000 account. So let's say we're willing to risk 5% of the account. So we're willing to lose $50. Our buy point is at $21. And our stop is going to be placed at the low, 3 cents. I recommend 3 cents. You can go 3, 5, 10, whatever you want to do. I like 3 cents because I don't want to take any more of a loss, but I like to give the stock a little bit of room to at least come back, okay? Because sometimes that's what happens during the day. Investors will just, you know, short-term traders are taking their profits, blah, blah, blah. Day traders, whatever, taking their profits early. And of course, they're selling their shares and the price is moving down. And sometimes institutions are very, very intelligent, which they usually are. And they can figure out where all the stops are being placed at mechanically, which I don't believe in that, but they do have that type of information. They can gather that, and I don't like that, but they can shake a lot of us out, us small investors out, and take our shares away from us. So yeah, but anyway, I'm not going to get on that subject. I don't talk politics here, let me put it that way. So that's not what this is about. This is education. This is education with the stock market for you to make money, okay? This is all about how we're making money. Ain't nothing about politics, okay? Get that out of your head. So other than that, you're going to place your stop 3 cents below the low of today at $20.13. This will allow you, well, it's a little overboard. Let's put the let's place the stop here at the low of 2 days ago, which the low would be at $19.71. So let's place it at $19.49. Okay. Well, if you want, you can tighten it up. Okay. Let's just place it at that low instead of playing the numbers game here. $19.68. Okay. This will allow you to position size at $795, so about 79 or 80% of your total account equity. You're going to buy 37 shares. Your stop loss percent is 6.29%. That's a pretty good stop right there, okay? It's a really nice stop loss. I like taking my stops. I usually place them anywhere between 3 to 8%. Nothing really over 8%. I don't like 9, I don't like 10, I don't like 11. It's just too wide. It's too wide of a stop. But if you have to place that wide of a stop, I recommend using my adjusting with risk method or my R method, okay? Because that really helps with that. And you don't have to, you know, use your full position or your full amount that you're willing to risk on the stock, okay? So other than that, with this, since you got a stop loss at 6.29%, your percent profit target needs to be at least 3 times that, so you want at 18.86%. Your profit target in dollar terms, you're going to look to start taking profits at $24.96. Okay, so what you want to do is, let's say this stock here, it's moving up here, breaking out, boom, we're moving up. Okay, so if this stock does pull back here, if it decides that it wants to pull back, clips that low right there, okay, just go ahead and get out. Obey the stop and go ahead and get out. Maybe this stock might have to come down to the 50-day moving average, touch base here, and then maybe it might bounce back, but I don't know. But if it starts cracking this $18.46 level right here, then get prepared, because this stock probably is going to go ahead and go on down to, you know, the 150-day moving average or 200-day moving average. But other than that, that stock will be dead in the trade. You need to move on to the next opportunity that I have to offer you, okay? So other than that, if this does keep moving up, if it moves up right here and it pulls back, if it's showing healthy signs, meaning that there isn't any sell signs such as high selling volume matched with the price action of itself, so more of the close ending in the lower third of the range, of the high-low range, closer to the lower third of that level, closer to the lows, and on high volume, high selling volume, go ahead and just leave the trade alone. Okay, so healthy signs are when it's making new 52-week highs, even if the stock does pull back a little bit and ends in the red. If it's shooting up to those 52-week highs, if it's surpassing the high of the next day, those are good signs. Don't let the stock go. Hold on to it and let your stop. If it's going to work out, it's going to work out. But if it's not, it's not. Just let your stop get hit, okay? Just go ahead and let your stop get hit and get out of the stock. Be patient with these things, okay? You got to be patient. I'm not here to predict these stocks. I'm not here to tell you that these stocks are going to, you know, move up 1,000% in 1 day, 2 days, 3 days, 2 weeks, a month, whatever. That's more than likely not the case. But I know the time range on these stocks, or not necessarily the time range on these stocks, usually give it around 20 days, okay? If it's not working out, then go ahead and just cut it and go. Okay, but other than that, if this stock moves up, decides to pull back on, you know, on light volume, you start adding your position when it starts moving back up out of that little pullback, okay? Start adding to your position. Go ahead and add your full account if that's what you think you need to do. But that's where you would start adding, okay? And place your stop, move your stop up, trail it, and move it at that low of that pullback, okay? And that's how you trade this stock. I'm not going to go any more into the risk management due to that we already put in 20 minutes in this video. I want to go ahead and get through this because I need to get back to the trading day as well. But I'm going to go ahead and show you these stocks right here. Sterling is the next, Sterling Construction Co., industrial sector, and the heavy construction industry, okay? This is a beautiful pattern. We do have this stock just moving along this 50-day moving average with huge demand coming off this 50-day moving average. As you can tell right here, boom, 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 boom. Doesn't even get, doesn't touch that 150-day, doesn't even get close to that 200-day moving average. This is good. This is what you want to see within a stock. This is springboard action. This could really take off right here, okay? So this is good. This is healthy action from a stock. Yeah, you have this massive down day right here, but I mean, look at it. It still comes back and it just tingles and dances around that 50-day moving average. Beautiful. That's what I call work, okay? Not only that, this is a nice flat base, or you can even say a rounding bottom with a handle right here. So this would be your rounding bottom with the handle, boom, 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 or the flat base. You got this nice resistance here at around $24 and a nice support line right here at around $19.50, okay? So, but other than that, showing really excellent, displaying excellent action today, price action today. Nice volume. We do have volume decreasing right here within this this price range here. Nice and tight all within here. So nice and tight all in here, period. I mean, this is, you know, about 20% from high to low. It's good to see, okay? And usually I like it anywhere between 5 to 12%, but 20% ain't bad, okay? It's not bad at all. And this is going to be more of your secondary base. This is kind of a base on top of a base, and your secondary base ready to move up into the third base, okay? So this is a good buy for today just because of the high volume and this breaking out right here off this nice little intraday double bottom pattern, okay? So great to go. Other than that, this is a high alpha stock as well, really good towards its peers, or according, you know, to its competitors. It is a strong stock, okay? So really nice action here, stage 2 uptrend. Everything looks good on this stock. HIMX, another one I really like here. And I, of course, saw this yesterday. It popped up on my scan. Really beautiful breakout right here over these super pivots right here. and this super pivot being more at the $15.70 level right here, really nice, and of course up 3.69% right now as we talk. So other than that, this stock is in a nice secondary base, a nice rounding bottom base right here, kind of with a handle pullback right here. A nice tight price action all in here, low volatility within this stock right here. It's what you want to see. We have nice volume dry up right here, volume dry up right here. Okay, so other than that, we have huge demand coming out right here, closing, getting close to 52-week highs. I think about only a half or a 1.5% away from the 52-week highs. Matter of fact, it's near all-time highs. If you want to take a look real quick, excellent to see. Yeah, this is right at all-time highs right here. Okay, so expect this stock to get even more of a boost. Being in the semiconductor industry right now, I know that with that chip shortage and everything that everybody's talking about, you'll hear it all over the place. I don't even listen to the news, but I still hear about it. Very interesting. Okay, very interesting developments going on with that. I don't understand it, but whatever. Price tells me everything. That's all I need to know is what's going on with the stock itself, what's going on with the stock market. It tells me everything as to what's going on economically, to what's going on with the stock or the industry itself. Okay, so I find these leaders, I find that sector rotation when it's happening, and I can make my inferences from there. Okay, not guesswork, nothing of that nature. It's all calculated. Okay, because where the money is flowing, you got to watch where the money's flowing, and you're gonna understand where we're heading at mentally as a nation. This is how this works. Follow the money, follow the money, listen to where it's going, see where it's going, and it's going to tell you where we're going in the future. Okay, where our mind is in the future. Okay, it's very interesting. We're all connected to this stuff. Okay, you may not think we are, but we are, and so that's just how that works. Other than that, nice volume popping out right here. This is a really good buy. Like I said, super pivot has been breached around 1575, somewhere in that nature. Okay, so this stock's ready to go, ready to buy today. Hold on to it. Place your stop accordingly. If you want to follow my AWR method, give yourself maybe right here at the low of yesterday, and that'll tell you the stock's probably going to be dead in the water. If you're going to place the trade today, go ahead and place it at the low of today. Okay, don't be surprised though if you do get stopped out, because it could come back to this 10-day moving average. If you want to trail it with the 10-day moving average, use the price of the 10-day moving average. Okay, and adjust accordingly your risk and your position size. Okay, so that's how you protect yourself. This is how you be safe within the market. This is how you remain safe and keep your money, keep your principal. So other than that, let's go ahead and get a move on with POWW. Traded this stock, and this stock is a beast today. And yeah, I'm making some good money today on this one. I bought right here at this point right here on the 18th of June. I have no sell signals within this stock at all. Yeah, this looked like a bad day right here, but oh well, guess what happened? Didn't even hit my stop. My stop was placed at the low of this day. Didn't even touch that. And, well, up, let's see here, around 30% within 8 days. That's how you do it. But anyway, not being cocky, not being arrogant, that's just how this works. And I'm pretty sure I mentioned this stock on one of my videos as well. So if you're following as to what I was saying, you bought this stock, guess what? They had excellent earnings. Their sales has been great. Not only that, they're in the industrial and defense sector and industry, and it's been doing great. If you look at Smith & Wesson, SWBI, their ticker symbol, had excellent earnings. I mean, listen to the money. Where's the money going? Where is it moving into? And a lot of this has to, a lot of money has been going into solar energy stocks. I'm going to tell you that right now. And of course, you've been seeing some really good action within that industry. And yeah, I didn't even buy into it, but you know what? It is what it is. So what? I saw those stocks like EMPH, SEDG back in 2018 before they even broke out and made their huge price runs. I watched it before that. I knew. I felt that coming. I didn't know. I just felt it. I saw it. I could see it. And because that's what my ratios were telling me, and my observations with how I have developed mathematically within the market has told me. You know, that's something that if you follow me and you watch and you listen, this is what you're going to get. I'm going to let you know these things, especially during the market updates. I give you these hints. I let you know what's going on. Okay, so it's good. You know, it's good stuff. I mean, there's really nothing good or bad if you want to think about it, but whatever. I'm just telling you that it's excellent information I'm giving you, okay? So yeah, maybe some of the stocks that I pick don't actually work out, but I'm telling you right now, I'm giving you the risk management behind it and the position size and guidelines to it. If you follow it and you just listen, then so what? You're gonna win, you're gonna lose some. That's life. Don't cry. And then don't get mad at me just because hey, that's what's popping on my skin. It looks good. This is just trading. It's just trading. Don't be a baby. Don't be scared either. Don't be scared. Because you never know what you got. I mean, like TRCH, JIL, VTNR, or VNTR. What was that one? Something like that, whatever. Yeah, I was watching those stocks. Been watching them. Traded TRCH too. So anyway, let's go ahead and get a move on. POW, this is an excellent buy, but be careful because we could have a pullback tomorrow, or sometime this week. Kind of pulls back. Maybe this stock just goes ahead and takes off and makes a massive gain tomorrow. Don't know, but play your cards appropriately. If you want to place your stop at the low of today. If you buy now, that'll give you about a 12% loss, but position size accordingly, okay, towards that risk management or that stop loss of 12%. Okay, just be safe, play it right. This is really nice. This is a very nice base, secondary base, rounding bottom. Of course, like I said, I caught it on this super pivot here. I'm just showing you this stock because the things that have unfolded for this company is interesting. And I'm going to read some of that news to you here in just a minute. So let's go ahead and move on to the fundamentals of these stocks here. We do have, let's start off with VTGN. They're not even ranked within their components here, but so what? The industry group rank is 120 out of 197, not so great. Their earnings sucks, but it is what it is. 4 consecutive years of annual earnings per share growth, though. That's good to see. That means that they're growing company-wise, that they're growing, okay? So other than that, this is the interesting part, 30% change in funds owning the stock and 4 quarters of fund ownership, increasing fund ownership with a B plus on the accumulation distribution rating. That's excellent to see. That's good to know. We do have funds, institutions, hedge funds buying this stock. This stock is in demand with institutions, okay? So it's good to see. So let's go ahead and move on to VNDA here. Vanda Pharmaceuticals. Vanda Pharmaceuticals ranked number 4 within their industry. And counterparts here, they're ranked, of course, industry group rank 120. 1,400% earnings per share, percent change last quarter, excuse me, with 478% last 3 quarters average earnings per share growth. Awesome. 2 quarters of earnings per share acceleration. Awesome stuff right here. I mean, that's excellent to see. Their earnings are great. Their sales kind of sucks, but 15% 3-year sales growth rate, not great, but not bad though either. But we do have 5% change in funds owning the stock with a B accumulation distribution rating and 3 quarters of increase in fund ownership. So there have been funds coming into this stock, increasing their positions within this stock. Okay, so good to see. Let's go ahead and move on to Sterling here. Sterling, we've got ranked number 2 out of their industry, out of the construction industry here. 99 in the group rank, which is really good out of 197. The relative strength of the group is a B minus. Of course, as you can tell, 208% on the earnings per share percent change last quarter with 84% last 3 quarters average earnings per share growth. Excellent to see. 1 quarter of earnings per share acceleration. Like I said, we are in that secondary base with this stock. That's awesome to see. When you count the bases, you know how to see the cycle. If you know how to tell the cycle, and then of the stock, and then match the base with the cycle, and then match the fundamentals to that base, you got all the ingredients to make big money. And this is how this is done. You got 36% 3 years earnings per share growth rate, 4 consecutive years of annual earnings per share growth with 22% change in the estimated percent change for current year. Okay, their sales not so great, but the SMR rating is a B, which is really good because the annual return on equity is 17.7%. So yeah, this is not too bad. Okay, other than that, we have 10% change in funds owning the stock and 2 quarters of increasing fund ownership with a C plus accumulation distribution rating. Okay, not too bad. We do have increasing funds owning the stock, so that's good. You want to see that percent increase. Okay, not only that, the quarters has been 2 quarters of increasing fund ownership, so we expect that to increase as well. Other than that, their earnings is August 3rd, 2021. Okay, so pay attention to that. Let's go and move on to HIMX here. I'm trying to hurry. I know this video is it's over 35 minutes already. Sorry about all that. HIMX is ranked number 1 within the semiconductor industry. Okay, this stock is excellent, and you're going to see something that they're doing here, which is very interesting at the time that they're doing it. Why they're doing it, don't know, but you know, management can be really weird at times with these companies. So other than that, this industry group rank is 55 and the relative strength rating of a B plus for the group. Earnings per share percent change last quarter was 1,800% with 3 quarters of earnings per share acceleration, with the earnings per share estimated percent change for the current quarter of 4,600%. That's serious business. Yeah, well, that's big numbers there. Consecutive years of annual earnings per share growth has been 1 year with 476% earnings per share estimated percent change for the current year. These numbers are big. Okay, this is really good. The increase within their numbers, within their sales, within their earnings per share is unbelievable. It's a monster. Their SMR rating is an A. The sales percent change last quarter was 67%. So their product is selling. Okay, not only that, their debt to equity ratio is only 10.9%, so they have little debt, okay, compared to their equity. Not only that, we have a 38% change in funds owning the stock with a B accumulation distribution rating. Really good to see with 3 quarters of increasing fund ownership. So you know these guys right here being in the secondary base right here, this has all the ingredients of a super performer. This stock could launch and take off, and you're welcome. Let me put it that way. I know you're probably saying, well, thank you for showing me this, and I'm telling you, you're welcome. I'm not being a smart ass, but you know, that's this is how this works. So we do have institutions that are back or at our back with this one here. As you can tell with the chart, this is an excellent stock. Okay, I'm not recommending any of these stocks. Do your own due diligence before buying any stock. Look into the stock. Do your homework. Okay. Any actions that you take, that's your responsibility. You take responsibility for your own actions. Okay. I'm not a financial broker. I'm not an advisor. Whatever. I don't recommend these stocks. This is for educational purposes. I'm just showing you how to buy these stocks and help you with manage your risk and your position size. So everything else is on you. It's all on you when you buy this stock. When you buy it, how you buy it, whatever you do to buy it, whatever. It's on you. So POW. Last one here, and then we'll go over the news real quick, and we'll call this video done. Sorry it's taken so long, but they're not ranked within their components here, within their industry, their competitors. But man, these guys have some interesting stuff here. And other than that, the industry group rank is 84 out of 197, in a relative strength rating B minus. They just reported earnings, and yeah, of course, I kept into earnings. Because I just had that hunch, and I don't like keeping all my money into earnings, but I did, and so what? My conviction was correct, and I had a lot of conviction on this stock, and so anyway, hold on, sweetheart. Other than that, 86% percent change last quarter, 1 consecutive year annual earnings per share growth. Sales percent change right here last quarter 408%, 3-year sales growth rate 172%. Awesome right here. We do have a 271% change in funds owning the stock with a accumulation distribution rating of A, with 1 quarter of increasing fund ownership, with this being in that secondary base right there. Yeah, this stock already making 52-week highs. Just be careful when buying today, okay? Tomorrow it could change, but this stock, just everything about this stock has success written all over it. So let's go through the news real quick. VTGN, apparently they've got some stuff going on with treatments with anxiety and social anxiety disorder, and also depression as well. So they're in their phases. If you want to read this here, the clinical trials of PH94B and additional anxiety disorders progress in efforts to initiate a U.S. multi-center phase 2B clinical trial of PH10 as a potential rapid onset standalone treatment for major depressive disorder, and begin a phase 1B clinical trial of AV101 with probenecide, which, if successful, has a potential to support exploratory phase 2A development of the combination of several central nervous system disorders. So apparently our physical year 2021 was transformative, involving several drug development, financial, and regulatory milestones that fortified the foundation for our very strong start this physical year, said VTGN CEO and Director Sean K. Signed. In the press release, notably, we achieved an important consensus with the U.S. Food and Drug Administration regarding our Palisade Phase 3 program for PH94B and social anxiety disorder. Building on that positive meeting, we completed a PH94B collaboration in ex-U.S. markets, strengthened our balance sheets with substantial investment from numerous long-biased healthcare-focused institutional investors, and advanced several development programs across our central nervous system pipeline, most notably preparations for the Palisade 1, our U.S. multi-center phase 3 clinical study of PH94B of a potential rapid onset acute treatment of anxiety in adults with social anxiety disorder. So they're looking at this right here to be their winner, okay? So this Palisade, and apparently they have a lot of backing here, institutions, of course, as we can see on the charts. You know, they're shown with the charts. They do have investors behind their back, so not too bad. If you think that's good, okay, I don't find anything within that, to be honest with you, because anything can happen, and biotechnologies are so volatile that if they're not successful, guess what? Investors will leave their ass and call it dust. And that's what happens. Sterling. So what's going on with Sterling? Well, I'm going to show you right here. They've been awarded several projects in several different areas, starting with, Hawaii project, Nevada, $20.8 million highway project. They've got their $40 million highway project in Hawaii, another one, and also in Nevada. Sterling awarded $10.5 million additional phase of work at Phoenix's Sky Harbor International Airport. So these guys are getting some good, we're $122.7 million design build project in Utah, featuring accelerated bridge construction. I mean, these guys are getting awarded some good money. I mean, there's some good contracts here, and they're taking over on that. So, they're working more on the roads and heavy construction, and apparently they're getting the business for it. So that's good to see, especially where we're at. So a little bit of news on that. And then HIMX Technologies here, apparently they're reporting a dividend. They're going to be paying a dividend. That's what I was saying. I don't understand this, but okay, whatever it is, what it is. Good for investors, especially longer-term investors. They're inciting longer-term investors because they're going to be paying a dividend, a cash dividend payment of 26 cents per share. And that will start on July 2021. So, shareholders who purchased the HIMX prior to the ex-dividend date are eligible for the cash dividend payment. This represents an 162% increase over prior dividend payment. Okay, so this is really like not just the chip shortage, but this on top of it. Man, that adds a lot to investors' interest, and they like this right here, especially as a longer-term trade. They really like it, so pay attention to that, okay? That's an interesting development, especially with semiconductors, I think. Anyway, so Vonda, nothing really going on with Vonda. All they did, report first quarter 2020 financial results, 5/5/21. All their news is back in back in May. Nothing really else developing with this company. So you take it how you want and you buy how you want. Whatever. If you want to do more research into this company, go ahead. Like I said, I don't really care for the news, but I know you guys like it. You know, I know you guys like hearing people talk about, you know, what's going on with the company. Well, why is it moving like this? Well, I don't care about the why. I don't care about the why it's moving. What I care about is what's going on with the price at this moment. I'm looking to make money. They could have terrible news and all of a sudden the stock just break out to the upside. Seen it over and over. I don't care. I don't care about that. But I'm just giving you this because I know you guys like it, and I'm bringing what you like. I know I'm not great at telling the news stories, but oh well. Pow, this one is insane right here. This one looks very promising because they got a huge DoD or Department of Defense contract to design and manufacture multiple ballistically matched multi-purpose rounds, BM MPR, for U.S. military operations. I was reading somewhere that they're making a certain ammunition for snipers, and they literally don't even have to calculate their scope, and it's very interesting. Pretty cool where we're coming to with stuff like that. The ballistic rounds and stuff. I mean, the military, if you really want to get onto technology, the military is where it's at. Man, the funding that they give to these companies right here and these companies that develop some of this stuff are just mind-blowing. And, you know, nowadays, yeah, no telling what we have. I mean, but anyway, so this is really good. I would tell you right now to look into this right here, into this company, read about it. They're fascinating. They're building, they got a lot of wind at their back, especially with the military supporting them, and a ton of research and development going on. They're building a new facility, I know that, here in the next year. They're coming out with a lot of stuff. I mean, these guys are on top of it, and they're very interesting. Okay, so you might follow them, read about them, see what's going on. So other than that, I'm going to go ahead and end this video. I want to thank you for watching and subscribing. If you haven't already, please do. You can click on the subscribe button, leave a comment, like the video. If you have any questions, I'll be more than happy to help you. Just ask, okay? Other than that, thank you again for watching, and these are the 5 top stocks, or the 5 best stocks to buy in July 2021, okay? The 5 best. Pay attention to them. So thank you again for watching. Here at Stocks Now, we trade in the present, we study the past for knowledge, and we follow the process of trading to build our future, okay? So thank you again for your support, and I'll be back with another video, a market update here in a little bit after the markets close. So other than that, opportunities awaits, my friends, all right?